I'll call it analysis of royalties receivable. Yesterday we had payable. Today I'm doing receivable because they've said you are required to prepare ledger accounts in the books of managing. Okay, that's the only reason I'm doing it receivable. Nothing else changes here. The calculations are exactly the same. So we have the year. Then we have, what's the next column after year? What's the next column? Production. So here it's going to be sales. Then we have minimum rent. Sorry, we have royalty. Then we have minimum rent. We have minimum rent. Next will be short working. Anisha, just next will be short working / surplus. Then we have short workings recouped. Recouped means recovered, if any. Then short workings carried forward. Short workings transferred to P and L account. Short workings transferred to P and L account. And here I will say payment receivable because we are in the books of the landlord. Yesterday it was payment to landlord. So right now we are in the books of the landlord. So I'm saying payment receivable or amount receivable from lessee, whatever it is. Okay. So let's start. Our first year is, now here they have given us the dates. They have given us the dates here. 31st December 2000. 31st December 2000. We'll write in all the information that's given to us. Then we have 31st December 2001, 31st December 2002, and 31st December 2003. Write the number of lots that are sold in each of the years. So in the first year it's 8,000, second year 9,000, 11,000 and 18,000. How much is the royalty? Per lot, 5 rupees. So 5 into each of these. So here you get 40,000, 45,000, 55,000. 5 into 18 is how much? How much? 90. How do I get this? Royalty per unit into the sales. So royalty here is 5. Yesterday's problem it was 1. So it was the same with the same figures here. Minimum rent. They specify the minimum rent to be 50,000 every year. Everyone's done till here? You can see behind. Any questions behind? Audrey? Yeah. Qureshi to pay Banerjee a royalty of rupees 5. Okay. Now let's do the short working. In the first year, we have a short working of what is short working? Difference between the minimum rent and royalty. When the minimum rent is more than the royalty, you will have a short working. So it's 10,000. Since it's a short working, we can't recoup anything. So what do we carry forward? The entire amount of 10,000. What is the agreement for recoupment? You can recoup it in the next 2 years. That's what they've said. They said if in any year the right to deduct the deficiency from the royalty payable in excess of that sum in the 2 following years. So basically what it means is this year short working, the short working of 2000 can be recouped in 2001 and 2002. The short working of 2001 can be recouped in 2002 and 2003. Next 2 years. Short working of 2000 cannot be recouped in 2003. Only in the next 2 following years. That clear? So we don't need to transfer because we still have 2 years to recover it. And how much will be received from the lessee? Minimum rent is 50,000. Okay. Next one. How much is a short working? 5,000. Since again it's a short working, we can't recoup anything. Wilton, I will have to change your place. Yes, there's place in front. Keep continuously talking behind that mask. Okay. Short working carried forward. Now we've got two, one of 2000 and one of 2001. Do we still have a chance to recover this 10,000? Yes or no? Because we still have another year to recover it. So we are going to carry it forward. So 10,000 plus 5,000. Total short working carried forward will be 15,000. What happened, Kamal? In the next 2 years. So next 2 years for this is what? So transfer to P&L account. We don't have to transfer anything because we still have a hope of recovery. Payment receivable will be the minimum rate. Next we have a royalty is 55,000, minimum rent is 50. So we have a surplus. Okay. Now we have two short workings. We have of the first year 10,000 and of the second year. Which will we try to recover first? 10,000. Okay. We are going to try to recover. How much surplus do we have? 5,000. We are going to try to recover 10,000 first. Can we recover the entire 10,000? No. How much can be recovered? Only 5,000. Okay, now pay attention here. From 10,000, we have recovered only 5,000. Can we carry forward the remaining 5,000? No. Why? Because for this year, we have only the next 2 years to recover it. So if we can't recover the full amount in those 2 years, it gets transferred to the PNL. So I'm going to transfer this 5,000 here. What about this second 5,000? Do we still have another year to recover it? So that I'm going to carry forward. Now they all look like 5,000, but you need to know from where they come. The amount is the same, but you need to know from where they come. So I'll just repeat this again. We have a surplus of 5,000. So I'm going to use the surplus to recover the or to recoup the short workings. Now we have two short workings. In the first year it's 10,000. In the second year it's 5,000. The agreement says that the short working can be recouped in the next 2 years at the most. If you can't recoup it in the next 2 years, you carry it forward. You transfer it to P&L account. Okay, it's a loss free. So we first try to recover this one. So right now we have a surplus of only 5, whereas a short working of 10 here. Okay, so from 10 we can recover only 5. That means since 2 years are already complete, the remaining 5 gets transferred to P&L account. What's the meaning of transferring to P&L account? You can never recover it again. Okay, whereas this 5 we still have hope of another year. So I'm carrying it forward. What will be the payment receivable? What will be the payment receivable? 50,000. The actual royalty is 55, but out of 55, we've used 5,000 to recover. Okay, so it's going to be 50. Coming to the last year, how much is the surplus? 40. How much do we need to recoup now? We need to recoup. Carry forward is only, right now how much we have? Only 5,000. So we are going to recoup only 5. Though we have 40,000. Okay, we are going to recoup only 5. Will we have to carry forward anything? No. So this is going to be net. Transfer, there's nothing to be transferred to P&L account this year. Now you tell me the payment. How much is going to be the payment? The actual royalty is 90. But out of 90, you've used 5,000 to recoup a short work. So how much can you actually pay the 80? Or the landlord is going to receive 80. You have a question? Doesn't make a difference. It doesn't make a difference. I can't hear Audrey. What you said in the previous problem? This one. Fine. Now they've asked us to pass books, prepare ledger accounts in the books of Banerjee, who is the landlord. I just put in brackets here landlord or lesser, just so that we don't forget. This statement doesn't change whether we are preparing it for a lesser or a lessee. It remains the same. Only the names here. The statement, the calculations remain the same. Doesn't make any difference. Okay. Okay. So we are going to prepare which accounts in the books of Banerjee now. Which were the accounts that we prepared yesterday? We had minimum rent account, we had the royalty account, short working account, and the landlord account. Now, they have not told us anything about whether we should prepare with minimum rent or without minimum rent. They have not told us a method. Okay, so we are free to choose. So I'm going to choose the other one without minimum rent, since yesterday I did with minimum rent. Okay, so which will be the first account? Royalties. It's royalties receivable account. Yesterday it was just royalties. So just to make a difference, it's royalties receivable because we are in the books of the landlord. The landlord is receiving the royalties. Royalties receivable account. Then we have short working. What are we going to call it? I told you yesterday, just not short working, but short working allowable. Because the landlord is allowing the lessee to recoup the short working. So it's called short working allowable account, whatever is allowed by the landlord, since we are in the books of the landlord. And finally, we have the lessee's account. Who's the lessee here? Quraish. In brackets, I'll just write lessee here, just so that. Learn one set of entries. When I say one set of entries, learn the entries in the books of the lessee. The books of the lessor is just the opposite. You don't go to sit and learn it separately. It's just the opposite. So right now, remember, we are doing it with without minimum rent. We are doing it without minimum rent. Now we've got two sets of entries. First set of entries is when minimum rent is more than the actual royalty. Second set of entries is when actual royalty is more than the minimum rent. A and B, remember that. Okay. So we need to see year wise what is happening. Same thing we did in yesterday's problem. So in the first year, minimum rent is more than the actual royalty. So we do the first set of entries, but without minimum rent. You get the difference, right? Okay. In the first year, when minimum rent is more than the actual royalty, you've got two ways: with minimum rent account, without minimum rent account. Yesterday, we chose to do it with minimum rent account because they specifically asked us. Today, they have not asked anything in the problem, so I'm going ahead with the other method. Okay. So, what's the first entry normally without minimum rent? Royalties account debit to landlord. Here it will be just the opposite. There's no landlord now. Lessee's account debit to royalties. What is called here? Lessee's account debit to royalties receivable. Okay, so remember it that way. Lessee's account debit to royalties receivable. So in royalties receivable, you will have it by lessee. Who's lessee here? Qureshi. Qureshi's account debit to royalties receivable. And how much is the royalty? 40,000. Royalty is 40,000. Okay. So if we have said Qureshi's account debit to royalties receivable, in Qureshi's account to royalties receivable. Sorry, I think I made a small mistake with the entry. What is the entry? We have not taken the short working into consideration. Ah, the amount is the amount. Okay. The entry is lessee's account. What's the entry without minimum rent? First, we'll see that. Royalties account debit, short working account debit to landlord. So it's just the opposite. I forgot to take the short working. So it will be lessee's account debit to royalties receivable to short working allowable. Okay. So lessee's account debit to royalties receivable to short working allowable. So in short working allowable also we'll have that part. Another part by Qureshi. Qureshi is the short working is 10,000. So Qureshi's account debit to royalties receivable to short working allowable to short working allowable, which is 10,000. So the entry is Qureshi account debit to short royalties receivable to short working allowable. This is how Qureshi's account will look. Right here. Next one is payment. Okay. Now, since we are in the books of the we are in the books of the landlord will pay or will receive? Will receive. So it will be bank account debit. From whom is he receiving? Qureshi. So in Qureshi's account, it will be by by bank by bank. Otherwise, it's landlord account to bank. So here it's going to be bank account to lessee's account, bank account to Qureshi's account. So in Qureshi's, it is by bank. How much payment has been made? 50,000. Or payment has been received. Better. Okay. And the last thing is transfer it to the P&L account. Here we'll use the trading account or the P&L account. We are talking about sales here. So we are going to use the P&L account. Yesterday we used the trading account because we were talking about production and output. Okay, so we are going to talk about sales here. So what's the entry? The royalty. We are in the books of the lessee. The royalty is an income or an expense. So we are in the books of the landlord. The royalty is an income or an expense. We are in the books of the landlord. The royalty is an income or an expense. Income. So which side will it come in the profit and loss account? Where do the incomes come in the profit and loss account? Debit or credit? Credit. Correct? Incomes come on the credit side. So what will be the entry? Profit and loss account and royalties. If the royalties on the credit side, what will be the entry? Royalties account, royalties receivable account, debit to P&L. So here we transfer the royalties 31st December 2000 to P&L account 40,000. Anyway, this is how the royalties go. Whatever you show, you transfer it every year at the end of the year. Close this, your Qureshi account balances. What will we have in the short working allowable account? What will we have here? To balance carried down. If you see the statement, we have carried forward a balance of 10,000. Royalties receivable account closes by itself. Now coming to the second year, it's the same situation where the minimum rent is more than the actual royalty. So the same entries again. Okay, the first set of entries. So the entries again, Qureshi's account debit to royalties receivable to short working allowable. So in royalties receivable, we will have 31st December 2001 by Qureshi 45,000. Bring down the balance here. By balance brought down. And we also have by Qureshi. Short working in the second year is 5,000. And since the entry is Qureshi account debit to royalties receivable to short working allowable, here we have two royalties receivable okay. So we have posted the first entry. The next one is what? For receipt of the royalty. We are in the books of the landlord. So it will be bank account debit to Qureshi. So in Qureshi will be by bank, which is 50,000. The last one, transfer the royalty to the P&L account. 45,000. So this closes. Short working account we need to close. Short working allowable account. 15,000. To balance carried down. 15,000. You can check this with your statement. If you see the balance carried forward in your statement in the second year, it's 15,000. So bring down the balance. Qureshi's account balances. So you have 50 here. Okay. So we are done with the second year. The accounts are closed. Any questions till here? Now we move on to the third year. Now in the third year, we'll have to go to the second set of entries because royalty is more than the minimum rent. The royalty is more than the minimum rent. So we go to the second set of entries. Now when the royalty is more than the minimum rent, what is the entry? First entry. There, what was the entry? In the books of the lessee? Royalties account. See, it's just the opposite. There's no short working now. There is no short working. So it was royalties account debit to landlord account. Here it will be lessee's account debit to royalties. What was the entry that we just passed in the first years? It was Qureshi's account debit to royalties receivable to short working. Now we don't have a short working. So it's just Qureshi's account debit to royalties. It's as simple as that. There's no short working. Okay. So Qureshi's account debit to royalties receivable. So in royalties receivable, you'll have by Qureshi. By Qureshi, 55,000. And here you will have two royalties royalties receivable. Now, let's go back to what we had learned under those entries. The second entry is for the payment. So there it was, landlord account, to bank, to short working if there's any short working recouped. I told you that short working is there only if there is a recoupment. Do we have a recoupment here? Yes, in the third year we have a recoupment. So the entry is landlord account to bank to short working. Reverse the entry. What will it be? One reverse the entry also. Landlord account to bank to short working. What will be the entry? Reverse. Bank account, because we are in the books of the landlord. He's going to receive it. Bank account, debit, short working allowable. When he's receiving, he's also allowing a short working to be recouped. That's the meaning of it. He's receiving money, but part of it is allowing the lessee to recoup. So bank account debit, short working allowable account debit to Qureshi. Okay, so bank account debit, short working allowable account debit to Qureshi. So in Qureshi, it will be by bank and by short working allowable. How much has Qureshi received? Check. How much has Qureshi received? How much? Qureshi has received how much? 50. Okay, even though the total royalty was 55, he has received 50. He has received 50. And the remaining, how much has he allowed to be recouped? How much has been recouped? 5. So even though if you see the side, the royalties are 55,000, but the entire 55 is not paid to him. 50 is paid and the 5 has been allowed to be recouped. So transfer this to the short working allowable account. Here it will be 31st December 2002 to Qureshi 5,000. Then we have any short workings transferred to P&L account. Okay, the entry in the books of the lessee is P&L account debit to short working. Here it will just be the opposite. Short working allowable account debit to P&L. Okay, so in on 31st December 2002 by P. What is the meaning of this? These are the short workings that the lessee won't be able to recoup. Even though the lessee has faced a loss, these are the short workings out of this 15,000, which is the short working right now. The short workings transferred to P&L account are the short workings that the lessee won't be able to recoup at all. So P&L, how much is the one that is transferred to P&L account? 5,000. Okay. And finally, transfer the royalties to P&L account. 31st December 2002 to P&L account. 55,000. Close the accounts. Qureshi's account balances. We have 55 here. Close the short working allowable account. think there's a small mistake here. Short working allowable account. Allowed. Made a mistake somewhere. Ah, what is it? I can't understand. Just put down your mask. What you said? Yeah, yeah. So the entry is wrong. The entry is posted wrong. This is sorry because it's not coming correct. Two to PNL account 5,000. To PNL account 5,000. So close this. Here the total is 15,000. To balance carry down is 5,000. Bring down the balance. 1st January 1st January 2003 by balance brought down 5,000. That's the same balance that we have carried forward. Now we come to the last year. Now the last year again the actual royalty is more than the minimum rent. So the entry will be lessee's account debit to royalty account. So Qureshi account debit to royalty account, royalties receivable account. 31st December 2003 to royalties receivable it's 90,000. So here you say by Qureshi 90,000. Now we move to the receipt of the royalty. So it's bank account debit, short working allowable account debit to Qureshi. How much has been received? How much is the royalty that has been received? I think 85. 85. And how much short working has been allowed? How much has been recouped? I think 5. So if we say by short working allowable here, in short working allowable it will be 2 Qureshi 5,000. There is nothing transferred to PNL account. There is no short working transfer to PNL account in the last year. And the final entry is transfer the royalties to the P&L account. To P and L. So your royalties account is tallying. The short working account is also tallying. There's no balance to be carried forward. Anyway, there can't be a balance because it's the last year. And your the lessee's account is also tallying.